a 30-year mortgage veteran and consistently ranked as one of the top 1% of originators nationally by Mortgage Executive and Scotsman Guide. Jason has seen all phases of the real estate market cycle and has helped his clients plan accordingly. He's here today to share with us how to build and maintain a good credit profile and how to make amazing cookies as well. So, Jason, the floor is yours. Welcome.
Thank you so much, Linda. Today, we're calling this building credit that works for you, but we can call it building and maintaining credit that works for you. We're going to cover building credit. We're also going to cover questions you may have about your existing credit profile and see how we can help you there too. Today, we're really going to focus on the habits that make building credit easier, make it a little bit less stressful. But the first thing I really want to stress to everybody is people tend to feel a little bit of shame around credit, whether they've used too much of it or there's been a late payment in the past, uh, or they just missed something when they moved. These things happen, and they happen to people at every income level. They happen to people who are extremely wealthy, and they happen to people who've never had credit before. But we're going to talk about how to rebuild, how to build from scratch, and if you do have existing debt, how to knock out that debt as quickly as possible. So we're going to cover some credit basics, some smart habits you can undertake, and ways to make an action plan to get you where you want to go. So we're definitely going to talk about what credit actually is and what makes up your credit score. We're going to talk about how to build your credit from scratch for those of you who've never had a credit profile before. We're going to teach you how to repair your credit. We're also going to teach you how to protect it. As I'm sure most of you have heard, identity theft in this country has been on the rise, and there are some pretty simple steps you can take to protect yourself. So we're going to talk a little bit about that. And we're going to talk about a 30-day plan. So everybody has some action items that they can partake in if they want to improve their credit profile. So one of the important things to remember is credit is a tool. It's not a destination. It's a means to an end. Although granted, there can be many, many ends that credit is a means to. We're going to talk a little bit about that right now. One of the most important reasons you want to have a good credit profile is it's going to entitle you to lower interest rates. And lower interest rates mean lower payments, and lower payments means that you can afford to do more with your money. Having a good credit profile is going to open up options for longer term financing, for less money down when you finance something. And again, if you borrow $5 at 10% interest, or you borrow $5 at 8% interest, your payment will be lower if you borrow that same $5 at 8 than if you borrow it at 10%. It's also going to help you with things like housing and utilities. When you go to rent a place, your landlord is likely going to want to check your credit references. If you open up utilities at a new place, having a good credit profile can prevent you from having to make any type of deposit.
They
And
won
finally,
11 to 10. It was close.
and finally, having a good credit profile can open you up when unforeseen challenges occur and give you more financial paths forward for everything from home repairs to medical expenses and anything in between. So one of the most common questions I get is, Jason, what makes up my credit score? And that's what we're going to talk about next. Your credit score basically falls into 5 different buckets of criteria. The most important thing, as you can imagine, is payment history. How have you paid the debts that you've already incurred? Do you pay them on time? Are you a little bit late? Have any of those have any of those credit accounts gone into default? And if so, have you gotten them out of default? The next big piece that goes into it is how you utilize your credit. And that covers things from how much do you carry as a balance compared to your credit limits, to the different types of credit you have. And whether or not you are using all of a particular line, or whether or not you're using all of the available credit you have across multiple lines and credit cards and home equity lines. The third thing that will go into your credit score is how long you've had it. This one's a little interesting because even though it's only 15% of your score, the length of time that you've had credit puts you into 9 different buckets that the bureaus have for scoring. And so the longer you've had a credit profile, even though it only makes up 15% of each scoring model, the more forgiving um, the credit scoring system can be when something bad happens. And the reason for that is there's more history for them to judge against instead of just one thing that happened very recently when the credit bureaus can go back 5, 10, or 20 years. So even if there's nothing you think you're going to need credit for today, it's a good idea to prepare yourself for the future because the longer you've had a credit profile, the better the odds of successfully applying for credit in the future become. The next thing that will go into your credit score is your credit mix, and that refers to the types of loans and credit cards and sources of credit you've applied for. Everything from mortgages, which are considered good credit, or car loans, which are considered good credit, installment debt, down to things like finance companies, where a store credit card may seem like a good idea to carry a balance on, but having too much on that type of credit account could actually skew your credit score. So let's start with some of the important rules of credit. And the first one is never miss a due date. The most important thing you want to do to build and maintain a credit profile is to pay your credit accounts on time. Some really helpful hints: set up auto pay. You don't have to set up auto pay for big chunk, but make sure that your minimum account balance due that month is being met. Excuse me, your minimum payment due is being met. Another way to make sure that you don't miss payments is move your credit due dates to right after a payday whenever possible. Some accounts like mortgages have very, very fixed deadlines for when payments are due, but other things like credit cards will usually let you choose what day of the month you want to make your payment if you call up the bank and say, hey, can we change my statement ending date to X and my due date to Y? They do actually try to be accommodating to do that stuff to help you. Using reminders and calendar alerts, whether you use Outlook or some type of other thing to keep your schedule, is a great way to make sure that you never miss a payment. And of course, if you can't make payments in full on everything that you own every month, make sure you're making the minimum payments on everything instead of throwing a big chunk of money at one particular account. The second thing you can do to keep your credit score up and to get it up is to keep your credit balances low. If you owe $300 on a $1,000 limit credit card, you're using 30% of the available limit on that credit card. If you owe $800, you're using 80% of the available balance. So let's say you need to borrow $1,000 right now, and you've got two credit cards, and one of those credit cards has a $1,500 limit, and one of those credit cards has a $5,000 limit. It's better for your credit score to borrow $1,000 against the credit card with a $5,000 limit than it is against the one with the $1,500 as a limit, because you won't be maxed out. You won't be using the bulk of your available credit on that card. The real goal, if you can achieve it, is to stay under 20% of the available credit limit as a balance on each of your credit cards. Another trick you can do, let's say you do need to borrow a significant portion of an available credit line in a given month. If you pay it before the statement closes, that will usually prevent it from reporting to the credit bureaus as you having a significantly higher balance. Most credit card companies, not all, and you'll find me saying not all a lot because every company does have their own guidelines. Most credit card companies do report to the credit agencies on the same day that your statement closes. So by paying down your balance before that date, you can prevent it from looking like you owe more money. And of course, if the limit is small, even a small purchase can make it look maxed out. So if you've got something that you have to put on a small limit credit card, let's say Macy's is going to give you a 10% discount for using your credit card that day, for using your Macy's card. It's okay to use it. Pay it off before the statement comes, and it'll look like you haven't maxed out that credit card. For those of you here who want to build credit and want to know how we start from scratch, let's talk a little bit about that next. So there are a few different ways that you can build your credit. And one of the simplest is getting a secured credit card from a reputable bank or credit union. You can also get what they call a credit builder loan. And credit builder loans are effectively secured loans that are secured by money you put in the bank. So you walk into a bank and you say, "Hey, I'd like to start establishing some credit. I'd like a loan." And they would offer you, let's say you put a $500 deposit in, they will give you a 1 year installment loan for $500, and you make your payments on time for that. All the while, the $500 that you gave to that bank is earning interest in whatever type of account they're securing. For those of you with no credit profile and you're worried about it being a little bit of an intimidating process, that's a really simple way to go about doing it. A third way to do this is to become an authorized user on a trusted family member's card. I want to caution everybody that there's a little bit of a pitfall to that. Just like we want to make sure that we keep our credit current and that we keep our balances low, if you become an authorized user on someone else's account, you want to make sure it's someone that you trust, that you know who's going to be responsible, and that they're going to make the payments on time for the account that they just added you to, because you're trying to build a good credit profile. And finally, you can actually self-report. Experian has the easiest, most flawless way to do this out of the three credit bureaus, but you can have them add a utility to your credit report. So you can self-report and have your electric bill report to the credit company. Your cell phone provider maybe will want to report to the credit company, as may your cable or internet provider. Again, these are all private companies, so you need to call your particular utility to make sure that that's something that they are willing to do. Things that you want to be careful at are high fee credit cards aimed at people who are trying to build a credit profile. There are a lot of cards out there where you want to make sure you read the terms first because they may offer you a $500 credit card to start building a credit profile, but they charge a $300 application fee or annual fee to do so. And the goal is to actually create an easier life for you. You don't want to create an unnecessary burden from the get-go. You definitely want to avoid buy now, pay later stacking across several different applications. So you don't want to just keep applying and applying all at the same time. You definitely want to make sure that you're not co-signing for someone else or becoming an authorized user without understanding the risks. And I know we covered that briefly, but I do want to reiterate it again. If you add yourself to someone else's credit card, you are subject to their ability to pay that credit card when you want to maintain a good credit profile. Don't open too many accounts at once, and don't have your credit report run too many times in a row. Every time you have your credit run to open up a new credit account, your credit score goes down for a little while. It's not that it makes you a bigger credit risk in the long term, but the credit agencies want to see how you're adapting to each new piece of credit that you apply for. So while you're building, maybe open a credit card today, wait another 6 months till that's going to stop impacting your credit score, and then open another card or a car loan or car lease or whatever type of account you feel the need to open. But don't try to do everything at once. It's building a good credit profile. It's a marathon. It's not a sprint. And it's something that you're going to be doing over the years, not only to build, but to make sure that you maintain a good credit profile. One of the most common questions I get from people is, how do I get out of this cycle? I'm stuck. I have too much debt. I want to pay it off. Couple of simple things you can try to remember that should help you pay down your credit quicker. So to pay it down a little bit more slowly, just creating a little snowball, you're going to pay your minimums on everything. And you start putting money towards the smallest balance. It feels really good because you get a quick win that you pay down a low balance credit card, but it's not always the most effective way to get rid of your debt. What you want to do is the pay down avalanche. You want to pay it down as quickly as possible. So yes, you want to pay down your minimums on everything, but you want to put the extra money towards the cards that have the highest interest rates. Because if you put money towards something with a higher rate every month, you're going to be paying a lot of interest. But if you start decreasing that balance so that that goes away first, you're paying less and less interest over time. And how quickly you're able to pay off all of your debt starts to really come together and really gather ahead of steam. It's the best way to save yourself the most interest, and it will usually put you in the best position to improve your credit report over time. So another common question is, how high a credit score can I get? In general, the highest possible credit score is 850. That's a theoretical number. I've been doing this for 30 years. I have never seen anybody who has a perfect 850 credit score. I've seen a couple of 848s, I've seen a couple of 847s. But the truth is, as soon as you start developing a credit profile, there are little things going on in the background of your credit report that prevent anyone from achieving that hypothetical 850 golden standard that is really just an ideal. Anything over an 800 is considered absolutely perfect credit. You will be entitled to the best rates on everything. You will be entitled to the best terms on everything. If your credit score is above 740, you're still considered very, very good. And you'll qualify for most credit cards. You'll qualify for most auto loans. There may be a top tier that's a little bit better, but you're the type of customer that people are looking to bring in. If you have a credit score between 670 and 740, it's still considered a good credit score. And you'll probably qualify for most things, but you may pay a little bit of a premium over people who fall into the very good and excellent status. Once you get below that 670 level, if you're in that 580 to 669 fair category and 300 to 579, that's where it can start getting a little bit harder to get credit and where we're going to start improving your credit score a little bit as much as we can so that you can borrow more and you can do it more cheaply and more effectively. One of the things you can do to make sure that your score stays high is to check your credit reports and check them as often as you'd like. There are a couple of different ways to do that, and we're going to give you some contact information for each of the 3 credit bureaus at the end and how to achieve your own credit report as well. The first thing you want to do when you look at your own credit is look for accounts that you don't recognize. If you see something that doesn't look like it belongs there, you can dispute it and you can get it off. There are a few different ways you can do it, but one of the simplest ones is every time you run your credit report at the consumer level, there's a contact number for that particular creditor. Call that number instead of trying to Google for their main number. The number that's listed on your credit report is designed specifically for people who have inquiries about their credit report. Look for late payments that appear to be wrong. Banks make mistakes just like people do. It's not uncommon for a bank to have reported a 30-day late when in actuality, they never received a late payment. They received it perfectly on time. So if it looks like it's incorrect, go back, check your records. If it's incorrect, again, start with calling the bank and calling that credit department that's on the credit report. And from there, make the necessary adjustments with them, or if necessary, involve the credit bureaus directly and formally dispute a mistake. Look for balances that aren't current. If something looks out of date, there's a good chance it is. You can also check the date that that credit account last reported. They might just be a little bit out of date. Good example is I went away last week, or I came back from going away last week. So I had charged up some money on a credit card. If that credit card reported while I was away, it would look like my balance is much higher than it is today. And even up to 30 days from now, it could still appear that I have that high balance. So if the creditor reported a long time ago, that's a red flag to say, hey, can you please update my balance? Again, you can call the number that's listed on your credit report and ask them to do it. They may just say, we report every 60 or 90 days. You might just have to wait a couple of weeks and the problem will take care of itself. As I just mentioned regarding current balances, you may also see old debts that have been paid off, particularly for those of you who've had any collection accounts. Collection agencies are notorious for not reporting when you've paid off a collection account. However, they are required by law to do so and to do so accurately. If you paid off a collection account 4 years ago, they can't say that you just paid it off yesterday. And if they do, that is also something you can dispute if it shows an active balance or if it shows it was paid off more recently than it really was. And then finally, look for credit inquiries you don't recognize. If somebody pulled your credit without your authorization, it's a sign that someone may be applying for credit under your name. And it's a good reason to lock or freeze your credit report, which we're going to talk a little bit about later. How do you run your credit report? One way is to go to annualcreditreport.com, which is listed right on this slide. Another way is to run it through each of the bureaus individually. There are 3 bureaus, Experian, TransUnion, Equifax. You're also entitled to get a free credit report directly from each of those. And you'll have their contact information at the end of this slideshow. As I mentioned, if you see an error on your credit report, you can dispute that error. You're not required to do this on your own either. There's something called the Fair Credit Reporting Act, and that governs how these disputes are handled. So you can dispute with the creditor. You can also file a dispute with each of those 3 credit bureaus. That can be done online, or you can call the credit bureau or write to them to dispute any account mistakes that you see on your credit report. A good way to make sure that things are accurate, make sure you know what's accurate. Keep records of what you're spending. So for each account that you have, yes, absolutely, you can go online and look up what they say the balance is. But if you've got receipts for what you've spent, you can check that against your records to make sure no one else is using your credit card and you're not paying off debts that someone else incurred. Finally, one of the most important ways for you to keep your credit current, even in difficult times, if you run into trouble before something becomes a problem, you can ask your creditor about a hardship option. If you have a severe illness, if you unexpectedly lost a job, if you're in bereavement because you lost a loved one, many creditors have tools in place to help you actually put off those payments until it's a little bit easier to do so. Again, I'd love to say how everybody operates, but different companies and different credit account types have different ways that they will handle what we call forbearance or forgiveness. So please contact each of your creditors individually for this. One of the things that's going to help you build and maintain good credit is having a budget in place. And there's an order in which you should be dedicating the money that comes in every month. The first thing that's always going to be most important, obviously, are your needs. We all need a roof over our head. We all need to eat. We all need to make sure that power and heat are on. So please take care of those things first, even before debt. We don't want anyone starving. We want to make sure that everybody here is healthy and able to live. But after that, we want to start off by making payments to our debt. We want to pay the minimums, and if we can, pay a little bit extra. The third thing we want to do, once we know we were able to make our minimum payments every month, start putting a little bit of money away. You want to make sure that you have a savings buffer in case something bad happens. Bad things happen to good people all the time. We started off by talking about that, and I can't stress it enough. Not working right now, not having funds in the bank to make a payment, there's no shame in that. But what we do want to do is start building for the future so that if something happens and we need access to funds, we have our own savings to go to in the future to make those payments. Finally, once you've got a good budget in place, you've met your needs, you're making all of your payments on your credit accounts, you're starting to put a little bit of money away, enjoy yourself. But plan it. Plan your spending. Don't do it suddenly. Know that, you know what? I'm going to be able to take a vacation in a few months, and I'm working towards that goal. It's amazing how quickly, once you start making a plan and executing it, you're able to start going into this 4th category and not just the first 3. So let's talk about a 30-day action plan that each of us can develop. First week, you're going to want to pull your credit report. It all starts with looking at that credit report and seeing what you're working with. I'd recommend, if you can, for those of you who have a credit profile, set up auto pay minimums for each of those accounts now. It's easy to do, and it will prevent heartache in the future and help you build your profile and look better and better. Second week, take a look at what the terms of your loans are and pick one credit card balance to focus on. Take a look at what's got the highest interest rate and start chipping away at that if you're able to make more than a minimum payment every month. Next, we're going to make sure that before the statement closes, we pay down what we can, because that's going to start building up your credit score more and more as you have lower balances each month when your creditors report to the agencies. The next thing I want everyone to try to do, if they can this month, is just choose one little thing that might save you anywhere from 10 to 50, or if it's more, even better, dollars per month. The more you're able to save and the more you're able to chip away and eliminate expenses, the quicker you can improve your financial situation and make your credit profile even better. I want to spend a little bit of time talking about protecting your credit now that you built it, because once we have it, we want to keep it. The first thing you can do is keep your credit profiles locked or frozen at each of the three main credit bureaus. So if you're not actively applying for credit, there's no need for you to have your credit open so that other people can run their credit under your name. It's pretty easy to lift those freezes if you decide to apply for credit in the future. You just go onto each of the websites for each of the three credit bureaus, unlock or unfreeze it that day, and then you can put that freeze back on. It's a simple way to keep yourself protected. Never, ever, ever, if you can avoid it, email anyone a document that has your social security number or a full credit card number or bank account number. It's one of the best things you can do to avoid falling victim to identity theft. If someone has your social security number, they can start applying for credit. But again, if your credit is locked, there's no way for them to apply because the credit bureaus won't release your data to any companies that they're applying through. Third thing you can do, and I'm sure everyone here has heard this on the news from a friend at work, keep your passwords private. Don't share your passwords. The best way to keep your passwords private is analog. If you can write them down instead of keeping them anywhere digitally, it's always going to be the safest way to hold on to those passwords. And of course, if you are writing them down, write them down and keep them in a secure place, not just sitting out at the living room table for everyone to take a look. And finally, never give out identifying information to someone who calls you and says that they represent your bank, your phone company, your mortgage lender, your car company. If someone calls you and you don't recognize them, and they call from a phone number you don't recognize, say, hey, you know what? I'm going to give you a call back. And then access publicly available means of finding the right phone number to call. Obviously, if they say that they're from a creditor that you have an account with, just call the number on your statement. They'll be able to help you and tell you if there's a legitimate reason why somebody called. Unfortunately, it's the world we live in right now, but a few little steps to make sure that you maintain your security are going to help you keep your credit clean in the future. I want to leave everybody with some helpful resources as well. So we did mention annualcreditreport.com. Everybody's entitled to use it for a free credit report, but each of the three credit bureaus will usually let you run a credit report every 30 days on yourself, no charge whatsoever. You can go to Experian.com, TransUnion.com, Equifax.com, the website for all three of these services. There are also some nonprofit services that can help you along the way. They include New Economics for Women, Women's Economic Ventures, Koreatown Youth and Community Center, United Way, and Haven Neighborhood Resources. I did forget to mention something during this presentation. I want to mention it now. You will have companies that represent themselves as nonprofit debt management services. Those are companies that you want to avoid. Their job is not to protect your credit. Their job is to negotiate a settlement. And very often they will negotiate that settlement at an incredibly high cost. Debt management companies are very, very unregulated. It's a good way to put it. So if you can avoid using a debt management service, please do. You can also learn a little bit more about this and the services that we offer at the Jewish Free Loan Association by going to jfla.org. The organization is wonderful. As Linda had mentioned at the beginning of this webinar, we provide interest-free, and no fee loans to people who are in need. So for those of you who are in a position, of course, we'd love for you if you could donate to the JFLA, but we're also here to help. So please use the QR code on the right if you find yourself in need and apply for a loan through the JFLA, the Jewish Free Loan Association. We're always here to help. There's one final slide. It's going to have my contact info. I'd like anybody on this webinar, it doesn't matter if you're taking a mortgage or not. I don't need you to be a customer, to please feel free to reach out to me about any of these resources. I'm always happy to help in any way that I can. So my name's Jason Hecht. I'm a Senior Vice President Guaranteed Rate and a proud member of the Jewish Free Loan Association. please feel free to contact me anytime. Thank you so very, very much. And I will take your questions now.
Fabulous. So, folks, if you have a question, go ahead and type it into the chat so I can see. And Elizabeth, first up, if you'd like to put yourself on camera and off of mute and go ahead and ask your question. She just disappeared from camera. She was on camera before. So, Elizabeth, if you want to put yourself back on camera, let's get your question answered. I've got it here in chat, but I welcome you coming and joining the conversation directly with Jason. So I don't know if I confused her. Maybe.
I'll
Or
take
did,
care of this one if that's
oh,
okay.
okay.
Okay, so Elizabeth wanted to know is there a plus on your credit score if you've been paying 10 days before the due date? Paying 10 days before the due date isn't going to help on your credit score, but as I mentioned, it will reduce your balance as long as it's received before the statement date. In terms of something reporting negatively on your credit, anything that is paid on time is great. In fact, if something's paid a little bit late, it's not going to impact your credit score. The credit bureaus don't take late reporting until something is 30 days past due. So if you make a mistake and you miss making that payment on time, you've got a few days of grace where you don't have to worry about it being reported to the credit agency, but you do want to get in the habit of paying on time.
Great. Thank you. And I see a question from Gabrielle. Gabrielle, if you'd like to join us for the conversation by putting yourself on camera and off mute, we'll give you a second to do that. Otherwise, there we go. I see your face. Yay. There we go.
Hi, thank you so much. That was so informative. Very
Thank
detailed.
you.
Thank you. I really appreciate it. I have a question. I think you touched on this a little bit, but just to be sure, is there any way that you could actually increase your credit fast? You know how people, oh, like there's these websites that say, oh, we can help you take your credit to like 100, like 50 points, like over. Is that like real, or is also something to stay away from? And if
So
so, is there a way that I can actually increase the credit score fast?
yes, but not through those companies. So when you see credit repair companies advertise, what they're really doing is they're trying to exploit loopholes in the system,
Hmm.
and they're trying to take advantage of the Fair Credit Reporting Act and bombarding a creditor to kind of get them to not answer inquiries. Sometimes it works. More often than not, it doesn't. And when it does work, it tends to be very temporary
Oh,
because ultimately the creditor is going to be reporting the accurate information again.
right.
However, to get your credit score up yet quickly, there are some things you can do.
Okay.
So, to get it up in 30 days, one of the best things you can do is look at which accounts that you have that are maxed out,
Hmm.
particularly small accounts that you can bring the balances down on. So
Okay.
let's say you've got $800 that you owe on something with $1,000 balance. You've
Hmm.
got $800 that you owe on something, excuse me, with $1,000 limit, you owe $800, or something with a $5,000 limit. Pay down the one that has the $1,000 limit first because you're using a higher percentage of available credit on that card than the other. The
Right.
other one's not maxed out. The smaller limit one is. Um, Other things that you can do, of course, if you do have something that's currently not being paid on time, if it's reporting as late to the agencies currently, your score will start to improve once it's showing as current. In general, there are 3 or 4 different buckets you'll fall into: 1 to 6 months, 6 to 12 or 24, depending on the credit bucket that you fit in based on the age of your profile, or 24 months plus. And then, of course, after 7 years, creditors no longer report old data. That will fall off of your credit report completely.
Okay. And then what about for student loans? Like if I have a student loan that's saying that like I borrowed, right, let's say like $30,000, but that comes up as like a credit, there's no way that I can really decrease that right? It's not like it's a
The student loan balances won't actually impact you negatively compared to their high limits because they're not revolving credit. They're not things you can charge up and charge down.
Oh, I
Remember, we spoke
understand
about
what you're
good
saying.
debt, bad debt?
Yeah, yeah, yeah.
Installment loans and
Yeah.
mortgages are what we call good debt. The amount that you owe compared to the credit limit doesn't hurt you. They just improve your credit as you make more payments over time in a timely manner.
Oh, okay, that makes sense. That makes a lot of sense.
If-
Thank you so much. This was really great. Thank you.
You're very, very welcome.
Thank you.
Rosa, you're up.
Sorry, tried to I was trying to find the mute button.
No worries.
So I currently have a loan with JFS. So I guess my question is, does that get reported to the bureau? Am I getting credit for making the payments monthly?
Can I turn this over to you, Mimi?
Yes. So, Rosa, a JFLA loan, I just want to double check because there is
Oh,
JFS, which I
I'm
don't
not
think they
even
do loans.
sure. It's been so long. It just
If it's
goes
with
out
us, yes. So
of
we do not report our loans to the bureau. So even though that you're paying that perfectly, which is what we love to see. So thank you, first of all, for coming to us and that you are a client and paying well. But no, we don't report those to the credit bureaus. And I do want to just be really clear for anybody who does borrow or requests to borrow more than $10,000, and also any guarantor who comes to us. All of our loans need a guarantor. We do run credit on to check the credit scores on those guarantors and those borrowers, and that is a hard credit check. And so Jason can talk about that a little bit more, but that does affect your credit because there's an inquiry on it. But in terms of all the great work that you're doing and paying back the loan, no, we don't report those to the bureaus.
And so I guess real quick, I would just want to ask one last question. So in the future, if I want to request another loan, do they base it on my payment history that I've
Yes.
created with
Yep.
JFS? And
Yes. So
and do I still can I apply for it even though I'm not part of the program anymore, the DV program? Or does that not
yes.
apply?
It does not apply. You can apply. We help all folks. So even if you, find yourself in a different situation, if you are a student and you borrowed to pay off school, and then 20 years later you come back and you want to pay for a wedding or whatever it is, we look at you as if a new client. However, your previous payment history does matter. So we definitely take that into consideration amongst all the other eligibility. And one other thing I will say, however, if you do default and we have to send you to collections, that does then get reported to the bureau. So
Okay,
we
no, I
don't
haven't
help.
defaulted. I've been
No,
paying.
no, not you personally, just anyone who borrows from us. No, absolutely.
Okay.
But that is where, we trust our clients to pay us back, and so that's a mutual respect. But then, of course, if we have to go to an outside collection agency, then that does get reported to the bureau.
And I'm so sorry. One last question. How do I check what the balance is on the loan that I got? Because I know it gets taken out of my account every month, and I don't. It was so long ago, and I was still like in the midst of the whole DV thing, and I was like, kind of sort of out of it, so I can't remember.
I will find your information offline and I'll send you an email tomorrow
Awesome.
morning.
Thank you so much. I appreciate
Of
it.
course.
I really want to
Joseph,
get to Joseph's. Oh, perfect.
go ahead.
Sorry about that.
No worries.
Hello, Jason.
Hi, Joseph.
Yeah, great. I'm not sure if you're familiar with what's called a debt management plan, where nonprofits negotiate lower interest rates with creditors in order to keep them from filing for bankruptcy, quite frankly.
I am. And those are actually the companies I was specifically saying you want to avoid if you can. So their job is not to help you maintain a good credit profile. Their job is to negotiate a path forward and a plan, often at the expense of, not often, almost exclusively at the expense of your credit profile. It will show that if you do use them for any accounts, it will show that they were part of a debt management plan. Also, many of these companies will say that they are nonprofit, and that is a very loose definition of the word nonprofit. Um, so no, debt management programs, unfortunately, um, will will do nothing but harm to your actual credit profile. There are some alternatives in terms of figuring out how to deal with credit and debt if you want to actually manage them. The first step I always recommend to people, contact the creditor if there is a problem making payments. Start there. If you can work something out with the creditor that's not going to impact your credit negatively, that's always the best place to begin. Happy to talk a little bit about any personal situations offline, but for anybody on this call. But as a general rule of thumb, avoid the consumer credit counseling organizations when you can.
Okay, great. The other question is, I'm not real familiar with JFLA. Can you just give me a brief idea? What are the requirements of people that you help out with this no interest rate loans?
So we look to help people in need. As far as specific requirements go, Mimi, if you want to touch a little bit on some of what we do, that'd be great. But there are a few different programs that we have for people who are looking to borrow.
Okay.
Yes. So I will keep it the 2-minute version, even shorter 2-second version, I should say. All of our loans are interest-free, no fee. So, and we help for various needs from everything from debt consolidation to rent to purchasing used cars. Individually, any type of need like that, medical bills, dental bills. We also have student loans, business loans, and nonprofit loans. And the rates or the amounts that we lend based on how many guarantors you are able to find. There's a list of eligibility on our website. I'll put this all in the chat for both our borrowers and our guarantors. Borrowers, some high level stuff is obviously need to be gainfully employed, show steady income. So actually you don't need to be employed if you have benefits and things like that. We do look at debt to income ratio. Thank you. But what you are going to spend the loan on, all sorts of things like that. So that's high level, but yeah, I'll put some notes in the chat.
Well, thank you very much.
Sure.
And if you'd like a real detailed to explore the full breadth of the types of loans that are available, if you go to jfla.org, you'll see it's the organization's been around for 120 years, and we're very proud of that and proud of the whole range of types of loans that are available to help people. So let's see if there's any other questions. If not, I have a few. So, Jason, you used the term to run your report or have your report run. Could you go into a little more depth about when it impacts your credit or your credit score that it's been run?
I can. So there are a couple of different ways to run your credit or pull your credit or have your credit done. You might hear a few different versions. There's what we call a soft pull, which is what happens when you run your credit, or when an existing creditor runs your credit to maybe give you a credit increase or to see how your payment history's been. Those things don't affect your credit score. What does affect your credit score is what's called a hard credit pull. And a hard credit pull means you're actively applying for a piece of credit. So you're looking to get an auto loan, you're looking to open a credit card, and you actually apply for the item. That is a hard pull, and that will have an impact on your credit score. One of the things you can do is if you're on the credit bureau websites, they will kind of have pre-approved offers for you. If you take a look at them, it's a good way to look at what some options may be without having your credit run. But keep in mind the 3 credit agencies, they're companies, they are for profit. So just because they're saying, hey, you're pre-approved for this particular offer, it doesn't mean it's necessarily the right offer for you. So please, if you do any of those things that don't do a hard pull, check the terms of them. Make sure that it's in your best interest.
If you see something like that, those types of offers, and you move forward to click and say, yes, I want that, now it's going to still pull a hard pull and affect your credit.
It will once you apply. Now, the creditors are supposed to let you know when they're about to run a hard pull. But as we all know, the fine print on these things can be pretty small and pretty easy to miss. So once you say, hey, I'm applying for this piece of credit, assume that it's going to be a hard pull that's going to go on your credit report. Karen had a question. Karen, are you there?
Yes. Yes, I am.
Hi.
Hello. I had really 2 questions. One is, what is the most accurate data or location we can go to look at the current mortgage rates? Because they look like they've been fluctuating, and we're all waiting for, the latest information that say that interest rates are going to go up or down.
They are, and I could go into great detail about that because I talk about it all day long. But the very quick and dirty way to do it is if you look up the 10-year treasury, so 10-year bonds, mortgages most closely follow those in terms of going up and going down.
Okay,
Um,
great.
that's a really good source. Also, Freddie Mac, one of the two big government sponsored entities,
Yes.
every Thursday they publish current mortgage rates. What is the average 30-year fixed and 15-year fixed in the country? The challenge with going with that data that Freddie publishes every week, though, is it's looking backwards. It's looking what did people close at the week before. But if you look at
Exactly.
what the treasuries are doing, you're looking at real time.
Thank you. And my other question was, I was shocked because one of my credit card companies raised my credit limit. I have no idea why they did that. And I called them and told them to put it back down where it was.
So by raising your credit limit, congratulations, they're doing it because that means you have a good payment history with them.
Oh,
Um,
okay.
so that's generally why they'll do it is over time as they see you making payments, particularly if you're charging it up and then paying it off, they want to encourage you to borrow more or at least have access to more, so they'll raise your credit limit. There's no need to ask them to put it back down. In fact, having them raise your credit limit is good for your credit score because remember we were talking about that if you owe 800 on something with $1,000 limit versus owing 800 on a $4,000 limit. In
Yes.
your case, the credit card company is doing the job for you. Once they
Oh,
raise your limit, you owe a smaller percentage of your available credit.
okay. I felt like Fred Sanford because it was like, what kind of genie that did this? Thank you.
My pleasure. Yeah, no, they know you're paying them on time, so they're raising it as time goes by.
Thank you.
Of course.
And we've got a
And I
question
will be making an
from
appointment to see you.
Please call me anytime. My information's all in the slideshow. I'm happy to talk to anybody, whether it's about a mortgage or not.
Great.
Carlos, is Carlos Elwell here? Um,
who
Maybe
was
Carl. I think Carlos was asking about JFLA. He wanted to know what happens when you want to apply, have excellent credit, but can't find a guarantor.
He's on mute right now.
Unfortunately, you can still apply, but we do need a guarantor for every loan. So usually there's a family member, a friend, fairy godmother. Sometimes, we can certainly work with you to find out who in your life might be able to be eligible for a guarantor, but it's not just your own credit alone, unfortunately.
Yeah, and Carlos, don't hesitate to reach out to the office and have a conversation about that because um, they're brilliant at helping you think through who else might be a guarantor. So, I have a question, Jason,
Please.
which is let's just say you've got a credit in, let's say 670, 680. So you're in that weird zone. Um, can you negotiate for better interest rates? Or they'll look at it and say, sorry, this is what your credit score says, and the algorithm says such, and that's it.
It depends on the type of credit you're looking for. I find that the most forgiving places and the places willing to improve the terms that they initially offered tend to be things like auto companies. So if you're leasing a car and you don't like the payment, their finance manager has a decent shot of going back to Toyota or Honda or Mercedes or Nissan and saying, look, we think that this person's worthy of getting tier one pricing instead of tier two pricing because yes, their credit score is a little lower, but look, they pay their stuff on time, they make good money, and they'd really like this car. How can we make it work? If you're going to apply for something like a credit card, the decision usually just kind of stands. Um, if you're going to apply for a mortgage, while the buckets are pretty specific, a good loan officer can also start coaching you on how to kind of get your score up a little more so you can get better credit and better terms. Sometimes that process may take a couple of days because we just pay down a particular balance. Sometimes it can take significantly longer as you're building a credit profile or recovering from an event that may have happened. But you should be able to find somebody to give you a path forward and get that credit score up.
Fantastic. Thank you so much for being here, Jason. I know just already from the comments that people have shared how much we've learned from you. Besides, we haven't heard about your dad's cookie recipes yet, but in the future. And so I really appreciate everything that you shared today. Folks, we hope you'll join us for our next financial literacy event later this fall on the topic of investing. It's mid-October is the planned date for it. We're also going to be sending out a recording of today's webinar so you can revisit the material. You'll be able to see, hopefully, the screen that's got the email addresses and so on. I know that the staff is going to assemble an email that shows all the information and resources that Jason mentioned with the phone numbers and the email addresses and so on. And please feel free to forward the email and the link to the recording to anyone you know who might find this helpful. And thank you all for joining us today.
Thank you also very much.
Yep. Be well and take care.
Thank you.
Thank you.
Thank you all for being with us.